Hey guys, my name is Alan Chen. I'm a CPA and the founder of Free Cash Flow Agency, the #1 dedicated accounting agency to e-commerce and online business owners. Today, I'm going to do something fun and react to 10 tax tips videos on TikTok and let you know if I agree with what they said, think it's complete BS, or just, somewhere in between, but it'll be good if you have a little bit more context. So I've never done this before, but as a former auditor at a Big Four firm, I always believe it's better to trust and verify. Let's get this going.
Here's a tax hack that poor people don't know about. Start a side hustle. The moment that you start a side hustle, you now become a business owner. And with being a business owner, you can now write off so many other things that you can't as a W-2 employee.
So normally I am fond of advice given by Ryan. He's a really smart guy, but this advice is actually quite reckless. And I hope most people who are poor people, as he wanted to refer them in the video, don't go out and do this. Don't just go and start a business while having a game plan in mind. It's not worth it for the write-offs if your business is not making money. At the end of the day, if you still lost money in your business, you lost money. Yes, you won't have to pay taxes as long as you don't have enough expenses in the business, but at the end of the day, you lost money, right? That's the fact that you gotta get in your head. And the time and effort of running a net loss business and the compliance headache with it that you're not gonna get back because you didn't go into your business with a game plan, it's just not worth it. So I would highly recommend you do not follow this advice. Instead, map out how to run a profitable business first, then jump. You feel much more prepared and excited to run a business you properly planned and excited to keep it going for years and years to come. Because trust me, businesses get hard sometimes.
I never pay taxes. If there's a way not to pay, I never pay.
You're constantly basically flipping your money into other bills.
Yeah, exactly. So I never have the money, right? I can never actually touch the money. In a real estate transaction, if you touch any of the money, then it's going to get taxed. So what I would do is I would just trade into another deal. I'm not avoiding the IRS. I'm just deferring until the future so that I can get my money.
Grant has mastered the art of the like-kind exchange, which, as he stated, is a way to keep deferring and having to pay his taxes. In essence, he is absolutely right. Like-kind exchange for 1031 is an incredible tool. Keep trading in your real estate properties for a different one in order to never receive the cash settlement, which then you will normally get from a sales of a property if you just sold it. This is a very advanced strategy and one you have to handle with care, as you need to make sure the property you're receiving will indeed have better future prospects and valuation than the one you traded in. Some have been very successful in navigating these waters, while others have not fared as well. I do want to remind you out there that you are just looking to sell your primary residence, you already have an incredible built-in tax exemption loophole. As long as you have lived at your primary residence for 2 out of the last 5 years, you will qualify to exempt the first $250,000 of gains from capital gains tax. That number increased to $500,000 for those that are married filing jointly. The exemption is only allowable once every 2 years.
Oh my God! Oh my God!
Yeah, absolutely. Unfortunately, we are now past the COVID tax break period that we've been using in 2020 and 2021. A lot of the incredible tax break we saw during that era to things like child tax credit, dependent care credit, and charitable contribution are reverting back to pre-2020 levels. So we should first go back to the beginning and give you guys a little background of where these tax laws originated from. So on March 11, 2021, the American Rescue Plan was signed into law to provide financial relief for millions of Americans. The plan included third round stimulus relief and expanded tax benefits that family could claim on their 2021 tax, basically what you file in 2022. However, these tax benefits will need to revert to what they were for the American Rescue Plan or expire. And just a quick lesson on credits. Tax credits are a dollar for dollar reduction in your tax bill, while deductions are a marginal benefit depending on what tax bracket you are in. So credits essentially are better for deductions.
There are some people out there that manage to lose money with a savings account. But because you follow me for all of the daily finance tips, I'm going to help you actually save money with a savings account. Shocker concept. Ally Bank Online Savings Account is what we can refer to as a high-yield savings account.
John, I absolutely agree with you on this one. Ally is one of the best and most trusted choices out there for a high-yield savings account. I have one myself. It is a great place to park all of your emergency fund money, basically anything you need in the next 3 to 6 months, which is usually something like a down payment for a house. The rate is constantly being updated on Ally. As the recording of this video, it actually gone higher than what John mentioned at 2.5%. It is now sitting at 2.75%. With the way the economy is heading right now, I would not be surprised to see 3% by the end of January. Make sure to put all your money here, folks, and not your big bank saving account that's still paying out a fraction of this rate. Smartest and easiest financial choice you will make this year. Go now. I'll link to ally.com below.
Your children should be working for you in your home-based business. And by the way, everybody should have a home-based business. Why should you have a home-based business? Especially if you have children, because you are going to supply those children with something. I don't care how broke you are. You're going to supply them with food.
So I actually think on the surface, this is a legitimate hack that you can utilize when you run an online business. But it's very careless the way she's describing it. In order for this to work, you really need to buckle on the proper documentation for everything that you're trying to deduct. She mentioned things like lessons and camps and homework. Those things, if not properly recorded and given a legitimate business reason, could backfire tremendously when it comes to an IRS audit. And trust me, they have been cracking down on small businesses trying to claim kids working in your business. Your 5-year-old should have no business running your social media network. Your 9-year-old should not be your operation logistic leads. Those are the kind of salary assignments and roles that are going to immediately raise a red flag in the eyes of the IRS auditors. So please be very careful when soliciting tax advice on the internet like this. They can be exaggerating, making you believe something that is possible, which it is, but it can also be stretching the truth, which is very dangerous. Always talk to a licensed professional before deciding if you'll be taking risky positions on your tax returns, such as the one we just mentioned in this video.
You do not have to pay someone to do your taxes for you or spend $50 on a service like TurboTax. You can Google IRS free file and it takes you to this website. If you made less than $73,000 last year, you can file your taxes for free.
Yes, the IRS and a couple other sites do offer these types of free PEP spread software. Would I recommend them to my clients? Absolutely not. So you have to understand, using a software like that is the equivalent of going to the cheapest accountant you can find with sometimes a bad HR block and asking them to prepare your taxes. Will they do it? Of course they will. But will they make sure you're tax efficient and getting the max amount of refunds and deductions you deserve? Probably not. That's the difference between a tax planner and a tax strategist. A strategist is going to take your business, evaluate it from head to toe, and tell you exactly what are the gaps in your business and where you can take the most deductions. Then they'll tell you how to do that for the next 3, 5 to 10 years.
Here's a tax hack most people don't know about. Whatever you're doing right now, I want you to go start a side hustle. Actually form an LLC. It's super easy. You can do it for just a couple $100 online. But start a side hustle and start making any kind of money a year. Even if it's only $100 a year, this LLC will now allow you to write off.
TikTokers love doing this type of video, give you that kind of advice. But I would highly recommend you not to go out and start LLC right this way, especially without a legit business plan. I can't emphasize that enough. I'm gonna keep saying it if I have to. If you're already making and running a cash flow positive business, by all means, go get yourself some liability but start an LLC for your business. That's the main benefit of LLC, the liability protection. For the rest of us out here that doesn't have a legitimate business plan, don't do it. That's a terrible idea. For example, I'm in the state of California. For any of us that's in the state watching this video, you'll know that LLC fees are some of the most expensive anywhere. They're $800. And you have to pay this even if you don't make a single dollar in your LLC. That's right. And it is every year you have to do this.
Depreciation on that asset, which means he gets to take tens of thousands of dollars off of his income.
Yep.
To Uncle Sam, even though the property's appreciating 30% in the past year, he gets to say, I lost money. He gets to take that off his income.
Depreciation is the hidden deduction that makes owning real property worth the time. By owning a property such as a house, condo, or boat, you get to take a deduction equal to the wear and tear on the asset over its useful life. So for example, if a printer's useful life is 3 years, then you get a portion of the cost of the printer as depreciation expense every year. So the printer's $300, you get to deduct $100 on your tax return a year for the next 3 years. But with current law, there are also bonus in Section 170 that will let you accelerate the depreciation as long as you put the asset to use. That means you can potentially take all $300 during the first year you put into service. So you can lower your taxable income right away by buying that expensive asset. Pretty powerful, right? Now imagine this applying to real estate or even a private jet for the rich. That's thousands, tens of thousands, millions of dollars we're talking about. Now you can see why they get all the deductions because they understand the tax laws that applies to their industry. That's the key to success.
I'm gonna give you a list of tax write-offs for hot girl content creators 2022.
That is an awesome video, and one where it's not talked about as often or specifically. With the rise of the QF industry and how content creator has been blowing up over the last few years, I would say it's even more important than ever to address all these questions that this industry has for what tax deductions are available. So I'm going to use this to name the 10 things that can be deducted if you are an online content creator or running an OF business. So number 1 is outfits or cosplays you wear exclusively for your content videos or live stream. Number 2, your cameras, movie light, and general filming equipment all qualify as deductions. If anything is extremely pricey, you'll need to consider it as an asset and depreciate the item. Number 3, events and shows. If you attend any seminars, conferences, webinars related to professions, those entry fees are tax deductions for your business. Number 4, business meals. Are you collaborating with other influencer or OF creators? When you go out and share a business meal together at a restaurant, you can safely pick up that tab as you can write off 50% of all business meals, including the tips and taxes. 5, Ubers. Yes, even if you don't have a card and just use Ubers to travel around, all of your Uber rides, as long as they have a business purpose attached to them, would qualify for deduction. Number 6, studio or Airbnb space. Are you renting an Airbnb or studio to do an exotic location shoot? All cost accommodation count towards your deduction for the year. 7, shipping and postage. Are you shipping any kind of merch to your fans? The cost of packaging, postage costs can all count towards your deduction, so make sure you save up all those fees. 8, contractors. Are you hiring someone to hold that camera right now while you record up your vlogs? The cost of hiring that contractor and training that contractors will all be a business deduction for your online content creating business, or OF. 9, accounting costs. Yes, even hiring a CPA or if you're using accounting software, we tax deductions for you. So don't worry about hiring someone that understands your business. Take care of all your stressful compliance situation for you. Number 10, home office expense. Don't forget about the big one, home office expense. Content creator can carve out the biggest space in their home or apartment and use it exclusively for business purpose, and the entire space could be a deduction for your business. For example, if you use 500 out of 1,000 square foot apartment exclusively to film and run your business, then 50% of rent, mortgage, property tax, insurance, and even repair and maintenance would count towards your deduction. It's one of the most powerful ones out there, so don't miss out. I hope this top 10 list helped you. If you do have any additional questions, feel free to leave a comment. Try to get back to you.